This June could define the future of the US economy. Wall Street senses it. The cycle is shifting, and this time there's no turning back without cost. Welcome to QQ News. Let's break down what investors need to know. The Federal Reserve has faced the most consequential monetary policy decision since the March 2023 banking crisis. Since January, the US economy has walked a tightrope, balancing conflicting data, sticky inflation, and a labor market that refuses to slow down. This year began with cautious optimism, and the markets rallied. S&P 500 passed 4,900 on hopes of mid-year rate cuts, but then came the data. GDP in Q1 grew 2.1%, driven by domestic consumption and tech exports. Inflation of the CPI January to March remained stubbornly high at 3.1 to 3.4%, while unemployment stayed below 4%. 3.8 in March, which disrupted early cut expectations. The result? The Fed held rates steady at 5.25 to 5.5%, signaling we're not easing yet. Now, April and May brought more volatility. Markets struggled for direction as bond yields surged again. Manufacturing, specifically ISM, dropped unexpectedly to 4.89 in April, while retail sales slowed, showing more cautious spending. While jobs data remained strong, hiring and wage growth started to cool. The real economy and inflation are now diverging, and the Fed has no clear playbook. Now, this June Fed meeting could set the tone for the rest of 2025. While the markets expect no rate change, the Fed's language will matter more than ever. CMF FedWatch puts a 53% chance on a September cut, while July odds have dropped below 20%. December still projects 1 to 2 cuts if inflation cools. We've got a base case of about 60%. As gradual disinflation allows a 1-2 rate cut by year end, S&P 500 could close near 5,200, and while the bond curve flattens, the rotation to defensive sectors begins. In an adverse case of about 25%, inflation could stay above 3% with no cuts. The markets correct 10 to 15%, the US dollar strengthens, commodities fall, and the 2026 recession risk rises. In a more optimistic case of about 15%, inflation could drop faster than expected. The Fed cuts could aggressively begin in September, tech stocks surge, yields fall, and markets rally. Now, what does this all mean for investors? 2025 is the year of macroeconomic ambiguity. The Fed can no longer afford to make messaging mistakes because its credibility is on the line. For investors, the strategy is clear. Don't gamble on the exact cut date and build resilient, diversified portfolios ready for both soft landings and higher for longer outcomes. Because June is not just another month. It's an economic turning point. Now, if you're ready to navigate this uncertain market with professional support, don't wait. QQ Capital Fund offers an initial free financial consultation to help you build a smarter, more resilient portfolio. You can follow us on Instagram, Facebook, LinkedIn for more insights, and visit us at qqcapitalfund.com to book your free session. This is QQ News. Clear, strategic, and data-driven. Until next time, invest smart and invest with purpose.